Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting, and today let's talk about balance sheet. Balance sheet reports a company's financial position at a point in time, provides an organized list of assets, liabilities, and equity, grouped according to common characteristics. So if we go back to our accounting equation, assets equal to liabilities plus stockholders' equity or owner's equity or shareholders' equity, whatever. So the balance sheet expresses the accounting equation. And the assets are classified or grouped according to common characteristics. Grouping provides useful information about liquidity, the ability of a company to convert its asset to cash, and long-term solvency, whether a company will be able to pay all its liabilities, including its long-term liabilities. Okay? And here, what do we have? How do we group the accounts? Based on liquidity, based on the ability of a company to convert its asset to cash. The most liquid ones go up, the last goes down. So that's, for instance, the most liquid asset that we have is cash because it's already converted in cash. So it will be the first one in our balance sheet. The last ones, usually it is intangible assets. We will not sell it, or we will sell it after a very long time. So they go into the bottom. Liabilities. The first liabilities to be paid, they go up. The the liabilities that I will be paying for last will be on the bottom. And then later the stockholders' equity. So our order is assets, and then the other side of our accounting equation. First, liability, and then equities. So let's come here. Let's work with a real balance sheet. Let's work with the balance sheet of Coca-Cola. And it is not any classified information. They are available for free on their website. It is here. You can pause our video, copy it here, or much easier, go to our video description. The link is over there. Okay, so let's find it. Oh, it is here. Okay, it is where in a form that we call Form 10K. So if you want any US based company financial statements, just Google the name of the company and then Form 10K. You will be able to find it. So we have here some info and then our summary. Where they are. They are on part 2, item 8, financial statement and supplementary data. Usually, if you click here, you will go there. I have no idea why the Coca-Cola is not working. So, okay, page 67. Let's go to page 67 here. And here we have our financial statements, and we have here the balance sheets. So let's come here to balance sheets. The balance sheet. Assets. What is the current assets? The current asset is our first group. We have two first groups: current assets and non-current assets or long-term assets. What is the difference? What current means? Current means 1 year or the operational cycle. Which one is the longest one? Operational cycle is usually how long does it take for the company to produce, sell, and receive the money. If this cycle is more than 1 year, we will consider current assets as this operating cycle. Very rare cases. Coca-Cola, this process takes weeks or short months. So current assets based on liquidity, let's come back here, the ability of a company to convert its asset to cash. So when this conversion to cash takes less than 1 year, we say that is current asset. If we don't know or takes more than 1 year, then it is long-term assets. So let's say current assets, cash and cash equivalents, short-term investments. This subtotal here, not all companies provide it. And then marketable securities, that is short-term investment, different short-term investment, accounts receivable, inventories, prepaid expenses. So here we have the current assets. Non-current assets or long-term assets are everything else. Uh, Long-term investment, other assets, deferred tax, some tax incentives that the company has, property, plant, and equipment, also called fixed assets, especially if we go to managerial accounting, trademarks, franchise, goodwill, and other intangible assets. So these four assets here, they are what we call it intangible assets. And then we go here, liabilities. Current, we also have current liability. The same thinking of the current assets. Everything that will be paid in 1 year or the operating cycle, which one is the longest one. Coca-Cola, 1 year. Accounts payable, notes payable, current maturities of long-term debit. What is this? Long-term debit, everything that I will be paying in more than 1 year. However, let's think about a mortgage. Mortgage, usually they are 15, 20, or 35 years. However, I pay it monthly. So I will pay it monthly. So this is the first year and then the remaining years. Income taxes, and we have the total of our current liabilities and then the non-current or long-term liabilities, long-term debit, also other liability, and deferred income tax. After that, we have our, they call it share owners equity or stockholders equity or owners equity. Common stocks and capital surplus, usually we combine them. We have the stocks, reinvested earnings or retained earnings, and then other topics here, other comprehensive income, treasury stocks, the stocks that we are the owners. So Coca-Cola here, they repurchase a lot of their stocks. And then here, minority was, and it happens only on consolidated balance sheet. That is what we have here. And then we have the total liabilities and equity. And remember our accounting equation, assets equal liability plus stockholders' equity. These numbers must match. 86.3, 86.3 over here. Okay, guys, so subscribe our channel. We have 3 new videos each week. And if you subscribe it, you will be the first one to know. And thank you so much. If you have questions or comments, leave it here or email me at jscarping@gmail.com and like our video, please. And have a very nice day. God bless you. Oh, and by the way, I was forgetting it. Like our Facebook page, Accounting Hub by Dr. Scarping, okay? Okay, guys, see you.